Get ready for a potential crypto boom. Reports suggest that China is gearing up to launch Bitcoin ETFs in just 7 days. This landmark move could pave the way for new millionaires in the crypto sphere. Stay tuned for updates as the countdown begins. Don't forget to subscribe, like, and share, and let's start. So we're starting off with BlackRock and Fidelity have stacked 416,000 Bitcoin with 0 days of outflows, 0. The people buying aren't Binance and FTX traders from 2021, they are not looking for a chance to sell. This is buy, hold, and buy more. That's what it is. Just in, BlackRock and Fidelity have increased their spot Bitcoin ETF holdings to a combined total of $416,000 Bitcoins worth $28.5 billion. As well as, no surprises, while Bitcoin sold off in reaction to the inflation reading, it's once again pushing to close above the 2021 cycle high. Choppy environment designed to shake you out before the breakout. $82,000 remains my next target. Also, Bitcoin and exchanges started falling for the first time in 2020, but the price did not surge significantly. This is because the super rich understood it and started their plan to stack as much as possible. Approved Bitcoin futures ETF to manipulate price. Luna, Celsius, BlockFi, and FTX crash. SAC deal was buried to drain the GBTC. Announced spot ETF before China. Stack in silence until China accepts spot ETF, then print the dollar to shreds buying the Bitcoin. As well as we go for it. Why is it so hard for some people to understand the use case of the Bitcoin? It's money that they can't confiscate or control. Money that doesn't require permission to use. Money that can't be created out of thin air. Literally takes 4 minutes to figure this out. Do the fucking work. As well as where the doctors. I keep saying hello to all of my followers who bought my call at 61,500. Bitcoin just went down to fulfill some CME gaps and grab some liquidity. As I said, I expect to see 72,000 in the next couple of days. I also expect to see a breakout after we touch $72,000 again. We already touched it before, and why didn't you tell people to sell and just hold it through? I don't know why these people still start thinking that there's some really good investors. All I'm saying is, if you could have already sold at 72,000, why are you waiting for it again? Because that's what we have. Hong Kong spot Bitcoin ETFs could be approved as early as next week according to Reuters. This is not even close to the priced in, and Chinese investors were panic buying a gold fund at a 30% premium this month as they attempt to get their wealth into something outside of the Chinese system. They know the music has stopped and it's time to rush for a seat on the live board. Real estate has been the de facto store of value in China for years, similar to the S&P 500 in the US, but that is quickly changing as the Chinese real estate Ponzi implodes. Gold has been a stopgap solution, but what happens when the Chinese Communist Party officially sanctions Bitcoin as a store of value with the approval of Hong Kong spot ETFs? The battle of Bitcoin East and West begins in earnest, and as the global debt bubble gets papered over, the world's wealthy will increasingly turn to Bitcoin to protect their status. I'll say it again, be careful giving up your seat on the lifeboat just because of some bare scribbles on a chart. The game is changing in front of your eyes. Also, GBTC, assuming fees remain the same, could be a threat on the post-Bitcoin halving price action. I had thought that this may be the first halving where the downstream price action effect may be quicker than normal. Normally it takes a few months to affect price as existing supply needs time to get chewed up before you hit the new lower daily mine supply. However, this halving is special because it's the first halving in history where coins and exchanges is going down, not up. However, if GBTC keeps dumping, it could plug the supply hole and does take the usual amount of time, 3 to 6 months, to see price be truly affected. If they lower their fees to be more competitive, all bets are off. What is GBTC's next step? Sell to irrelevance or get in the fight and compete? New, the IMF was holding financial aid for El Salvador due to its Bitcoin alliance, per report by international publication InfoBay. The spot Bitcoin ETF inflows are slowing down significantly. As we could see on this chart, basically we're getting less purchases and it's slowing down, and probably we will not see that much of purchases anymore. US Bitcoin ETF took the price from 45,000 to 70,000, and that's an 80% increase within just 3 months. Expect a similar outcome from Asia approving Bitcoin ETF next week along with Halving. Are you mentally prepared for the 100,000 price? Wedmont Private Capital, a Philadelphia-based RAIA, disclosed owning 3,471 shares of the Fidelity Bitcoin ETF as of the March 31st, gradually then suddenly. As well as what we have here, the breaking news: Hong Kong set to launch a spot Bitcoin ETFs on April. Approval of a spot Bitcoin ETFs in Hong Kong signals a significant shift in a region's financial landscape. A limited number of licensed crypto exchanges pose challenges for investors interested in a spot Bitcoin ETF. Successful expedited approval by China Asset Management underscores efforts to meet stringent regulatory criteria. Hong Kong investors may soon be able to get involved in the crypto universe with approval of spot Bitcoin exchange-traded funds from the Hong Kong Securities and Futures Commission. This move is expected to be revealed on April 15th, marks a significant development in the region's financial landscape. Harvest International Asset Management Company and China Asset Management Company, prominent mainland public fund companies, are included as well in the updated list of virtual asset management fund companies, which means that they are now allowed to offer Bitcoin ETFs to the public. As well as China launches a groundbreaking blockchain platform for Belt and Road Initiative. Conflux Network, recognized for its multi-chain blockchain ecosystem, operates under the guidance of the Conflux Foundation, also known as the Shanghai Tree Graph Blockchain Research Institute. The Chinese government, in a pioneering move, has unveiled a new blockchain infrastructure platform spearheaded by the Conflux Network, named the Ultra Large Scale Blockchain Infrastructure Platform for the Belt and Road Initiative. This project is designed to serve as a foundational public blockchain tailored for cross-border applications. An announcement on April 1st by Conflux Network highlighted the platform's ambition to foster cross-border cooperation along the Belt and Road Initiative, aiming to create a public blockchain infrastructure platforms that supports the development of applications facilitating international collaboration. Conflux Network, recognized for its multi-chain blockchain ecosystem, operates under the guidance of the Conflux Foundation, also known as the Shanghai Tree Graph Blockchain Research Institute. This initiative marks a significant stride in the blockchain technology, especially within the context of China's traditionally restrictive stance on cryptocurrencies. As historically, China has exhibited a stringent approach towards the cryptocurrency market, intensifying its regulatory measures since 2017, including the shuttering of Bitcoin exchanges. However, despite these restrictions, a considerable portion of Chinese investors continue to engage with cryptocurrencies. And a report by Kairos Ventures in December 2023 indicated that 33.3% of Chinese investors hold a significant amount of stablecoin, ranking just below Vietnam. And this persistence underscores the innovative methods employed by Chinese traders to navigate the constraints imposed on crypto trading. So that's kind of all the information we got on the Bitcoin today. Don't forget to subscribe, like, and share. See you in the next one, and peace.